Welcome to this WTR Flashcast. I'm your host, Tim Gerdeman, Vice Chair and Co-founder and Chief Marketing Officer of Water Tower Research. In today's podcast episode, I'm being joined by my colleague and WTR Senior Energy Transition and Sustainable Investing Analyst, Peter Gastreich. Peter will share some insights from his initiation of coverage on Valero Energy, NYSE, ticker symbol VLO. Good morning, Peter, and thanks for joining.
Good morning, Tim. Good to be here.
Peter, for starters, most generalists would think of Valero Energy as being an oil refiner. What is the angle here for yourself and for investors in the energy transition and sustainable investing space?
Well, it's a good question, Tim. Valero is indeed one of the largest refiners in the world and probably the most cost advantaged in North America. But the story doesn't stop there. This company also runs one of the largest renewable fuel businesses in North America and globally. And moreover, this business is setting the stage for a strong recovery. Diamond Green Diesel, which is a JV between Valero and Darling Ingredients, operates North America's largest renewable diesel operations and now has the ability to produce sustainable aviation fuel. Valero is also the second largest corn ethanol producer in North America. So for investors in renewable fuels, this is a company to stay on top of, even though refining is today the major driver of overall operations. I would just say that if investors want to do work on companies with a bigger slant toward renewable fuels, they can check out our companies under coverage at Water Tower Research, including Gevo, Green Plains, Houston American Energy, and Nesta, as well as the multiple other names we have hosted in our dedicated podcasts and symposiums. So check out for the website for those.
Great data points, Peter. Your report title captures that Valero margins are improving on all fronts. Can you elaborate a bit?
Sure. Yeah. Well, for Valero, it's not just one part of the business doing all the heavy lifting as we go into next year. Refining, renewable diesel, and ethanol are all playing important roles in boosting the company's performance. First, let's look at refining. Refined product supply has been pretty tight this year, especially when it comes to distillates. Last month, U.S. distillate inventories were reaching 6% below the 5-year average for this time of year. Demand has been strong for both diesel and jet fuel, but there's also a policy impact earlier this year that led to significantly reduced production of renewable diesel. With less renewable diesel available, the market turned back to fossil diesel, pushing up demand and prices. Looking ahead, with potential sanctions on Russian oil products, the market could remain tight, potentially sending refining margins even higher next year. Plus, if OPEC increases heavy crude output, the discount on heavy oil versus light oil could grow, which is great for Valero since their refineries can handle those heavier crudes and benefit from the price difference. Now, for renewables, the renewable diesel market has started to find its footing in 2025 after some oversupply issues, with the EPA eyeing higher biofuel blending mandates, plus the extension of key tax credits. Earnings trajectory looks good at Diamond Green Diesel. Ethanol is also on a winning streak. Thanks to a likely record corn harvest and strong export demand, margins are the best that we've seen in a while, and corn oil prices are up, giving Valero's ethanol business another lift. All in all, Valero's margins are improving across the board, and FactSet consensus analysts expect this will show up in earnings growth. You've got EBITDA predicted to rise 63% in the second half of this year, and another 20% going into 2026.
I just drove through the Northwest Ohio Corn Belt this weekend. Things looked rather healthy. I'm curious, what gives Valero its edge in refining and renewable fuels?
Well, a big advantage is Valero's Gulf Coast-centered refining network, which allows access to multiple crude types, both domestic and imported, and direct export routes. The company's operating cost is consistently the lowest amongst peers, if you take a look at that, while margins are consistently at the top of peers. In renewable fuels, both Darling Ingredients and Valero contribute to the Diamond Green Diesel JV, including Darling Ingredients with the ensured access to low-carbon feedstocks, and Valero contributing its large integrated logistics and marketing capabilities. Finally, the large ethanol capacity could be a much more valuable asset in the future, particularly if opportunities emerge to transition to low-carbon ethanol and alcohol-to-jet SAF production.
So you already touched on Diamond Green Diesel, or DGD, but I'm curious about that partnership and its importance to Valero's renewable fuels business.
Well, Diamond Green Diesel is very important to Valero. This joint venture with Darling Ingredients operates 2 facilities in Louisiana and Texas, making this the largest renewable diesel producer in the U.S. And importantly for this JV is Valero's first entry into sustainable aviation fuel, Tim, which we've talked a lot about, has a big growth outlook.
How does a sustainable aviation or SAF and low carbon ethanol fit into Valero's future?
Well, as airlines ramp up decarbonization efforts and the new mandates kick in, SAF will become more and more important, and Valero is in a great position to ramp up production and take advantage of these new market opportunities when they present themselves. With respect to SAF and low carbon ethanol, Valero has good optionality. You don't see this a lot. They have multiple pathways that they can pursue. The company is scaling up SAF production at its Diamond Green Diesel Port Arthur plant and looking into the alcohol to jet process, taking advantage of its strong ethanol biorefinery assets. So if the Midwest carbon pipelines get built, Valero will be able to make low carbon ethanol feedstock for SAF and tap into valuable carbon credits. There have been some major stumbling blocks, however, it's worth to mention in terms of seeing the pipeline infrastructure getting the green light in the Midwest, especially due to opposition in South Dakota. But the potential in the long term is hard to ignore, as carbon capture and storage would enable a 2 to 4 times increase in operating profit from the ethanol division when compared to this year's levels.
That's great, Peter. Before I let you go, I'd be remiss if I didn't ask you to speak to Valero's financial strategy and capital allocation.
Absolutely. So yeah, they're highly focused. They have a very disciplined capital allocation. If you look at the history there and operational excellence and safety. Management rewards shareholders, striking a balance between 3 things. You've got returning cash to shareholders through dividends and share buybacks. You have investing in high return projects, and then you have keeping the costs low. Most of their spending goes toward maintaining safe and reliable operations, with a small amount aimed at growth, especially in renewables. With a capital discipline framework, all projects, both refining and renewables, have to meet a minimum return threshold of a 25% after-tax IRR. In terms of returns to shareholders, Valero has a minimum payout target of 40 to 50% of adjusted net cash provided by operating activities. Valero returned last year, for example, $4.3 billion to shareholders, including $2.9 billion in share buybacks and $1.4 billion in dividends.
Great. Thank you, Peter, for those insights from your initiation of coverage report on Valero Energy, NYSE, ticker symbol VLO. Also, a special thanks to the producer and editor of the podcast, Krista Fitzpatrick. Thank you all for listening, and don't forget to subscribe, as well as visiting www.watertowerresearch.com to read Peter's latest research in the energy transition and sustainable investing space, as well as to access countless other small cap equity research reports, podcasts, fireside chats, industry-specific symposiums, and conference schedules from Water Tower Research. We will see you next time for another edition of the WTR Small Cap Spotlight podcast.